Welcome back. So we had just completed the introductory class of relevant costing. Today we will be starting off with the relevant cost of raw materials. So let's take a look. So in the previous class, what did we study about relevant cost? Relevant cost is related to the future. It is incremental or it is an additional expense. It is a cash outflow, or it could also be a lost cash in. This was what we studied in the previous class. Now this seems to be a bit long, right? So we can shorten it only for the purpose of raw material. Cash outflow or a lost cash inflow. So always put in mind, whenever we are considering the relevant cost of raw material, please see whether it is a cash outflow or whether there is any lost cash inflow, whether any inflow has been lost. So the only two things that you have to remember. Now, what could be the relevant cost of raw material? What is the cash outflow that is taking place? Whenever we are purchasing the raw material, you will have to pay for its purchase cost, right? So there is a cash outflow taking place. So that's the relevant cost for raw material. So the purchase cost of the raw material is the relevant cost where there is a cash outflow taking place. Replacement cost. Now this term is very important. I will explain the meaning of the term replacement cost. Suppose you are having a cutlet business, okay? And you have the raw materials for the cutlet. One of the raw materials for making cutlets is potatoes. So you have a huge stock of potatoes, okay? Now you plan to start a French fries business. And as you know that the raw materials for French fries is also potatoes. Now suppose you are transferring the raw materials from the cutlet business to the French fries business. Okay. So the cutlet business has to go on, which means that when you have an ongoing business, if you are transferring some raw materials from an old business to a new business, you will have to replace the raw materials for the cutlet business, or the cutlet business will stop. So whenever the raw materials are regularly used, please note the term regularly used means the raw materials are already being used for an existing business. Okay. So whenever the raw materials are regularly used, we should take the replacement cost. And what do you mean by replacement cost? Replacement cost means we have to go to the market, buy some potatoes and give it to the cutlet business. So that is nothing but the purchase cost. So now we have finished the cash outflow part. Now what is left is the lost cash inflow. Okay. Opportunity cost. Opportunity cost is the revenue lost from the next best alternative. This is something that we have already studied in the previous class. Now suppose you are going to start a French fries business and you have a stock of old potatoes lying in your godown and you are actually planning to sell it as scrap in the market where you will get a net realizable value of $5. What do you mean by net realizable value or NRV? It is the amount that you get when you sell this potato in the open market. Okay, so you get a net realizable value of $5. Now, if you use this old stock of potatoes in your French fries business, then what are you losing? You are losing $5, right? So $5 is the lost cash inflow. And we know that any lost cash inflow is a relevant cost. So in this case, the relevant cost is $5 because it is a lost cash inflow. Now let's go to the questions. Question number 1. A company is considering a project that would use 1,500 kg of raw material Q. So how much quantity of raw material Q is required? 1,500 kg. Let's make a note of it. So required 1,500 kg. Material Q is in regular use. Please note the terms in regular use. Whenever the words in regular use is used in the question, you should immediately put in your mind that it is used for an existing business. And if you're going to use this particular raw material for a new business, then this has to be replaced. It currently has 1,000 kg of raw material, which was purchased last month at $4 per kg. So right now we have 1,000 kg. How much quantity is required? We need 1500 kg, out of which we already have 1000 kg in our hands and it is regularly used. And I told you, whenever it is mentioned regularly used, then it is to be replaced. So 1500 kg we need. We already have 1000 kg. So how much quantity we should buy from outside? 1500 minus 1000 or 500 kg we should buy from outside. Coming back to the question, it is mentioned it currently has 1000 kg. So that's what we have written here, which was purchased last month at $4 per kg. Purchase price of the last month. Purchase price of last month is $4. That is just a past cost or a sunk cost. It is not at all relevant. So $4, it's nothing but a sunk cost. Completely ignore. Current replacement cost of material Q is $4.8 per kg. Replacement cost. What do you mean by replacement cost? I told you replacement cost is nothing but the purchase cost. So we are going to multiply 1500 with 4.8 into 4.8. We get the total amount as 4,800 and 2,400, which means that the total relevant cost is 4,800 plus 2,400, which gives you 7,200 amount is your relevant cost because that is the cash outflow. Now coming back to the question, it is mentioned and the current inventory could be sold for $4.3 per kg. 4.3 is nothing but the NRV, agreed. But are we losing this NRV because of our new decision? Think for yourself. What is the present situation? In the present situation, we are using material Q regularly for our existing business. Are we trying to sell this in the market? No. So even if we take a new decision, there is no lost cash inflow. That is the reason why NRV is not considered a relevant cost in this question. So never get confused. Just because an NRV is mentioned in the question, don't write it as a relevant cost. Consider the present situation. Present situation, are we getting NRV? If the answer is no, then don't need to take. But if we are getting NRV in the present state and because of our new decision, we are losing that, yes, we have to take that amount as a relevant cost. In this particular question, we are not losing the NRV and hence do not take it as a relevant cost. I hope it's clear. Question number 2. U company has been asked to quote for a contract. Details of material X. Book value is $5.5 per kg. Book value is nothing but a past cost, a sunk cost. So completely ignore, it is not relevant. Scrap value is $0.5 per kg. Okay, so that is one use of material X. Scrap value of $0.5 per kg. The replacement cost is $5.5 per kg, which is nothing but the purchase cost. Now, the contract requires 10 kg of material X. So what is required? Required is 10 kg. There was 250 kg of inventory which was bought in error 2 years ago. Okay, so we've got a huge stock of raw materials. Okay, now let's see what we were planning to use it for. If X is modified at a cost of $2 per kg, it could be then used as a substitute of material Y, which is in regular use and currently costs $6 per kg. So what has been mentioned? It has been mentioned that right now we are using a material called material Y and we are buying material Y from the open market at $6 per kg. Now we have an option. Instead of buying material Y from the open market at $6, we could use the existing stock of raw material X as a substitute for Y. And we need to pay only $2 per kg. So instead of buying raw material Y from the market at $6 per kg, we can just pay $2 per kg and modify X to use in place of Y. So how much are we saving? $4. 6 minus 2. Okay. So we will see the uses of X. One use was we could either sell it for scrap. We will be getting only $0.5. Or the second use is we could use it as a substitute of material Y, in which case we will be saving 6 minus 2 or $4. Okay, so we will just take note of it. You could either sell
it at NRV. You could either sell X at NRV, wherein you will get $0.5 per kg, or you could use as Y substitute, wherein you will be saving 6 minus 2 or $4. So do you want $0.5 or do you want $4? What do you want? Naturally, we want $4, right? So among these two use, we would be opting for the second use. We would be using material X as a substitute for material Y. That is its present use. Now, if you are using this material X for the new contract, then what are we losing? We are losing $4, which means that the cash outflow that is taking place because of our decision to use material X for the new project is $4. So what is the relevant cost? $4 per kg. And we need 10 kg. So 10 into 4. So that's the relevant cost. So relevant cost is the cash outflow, which is 10 kg into 4, which is $40. So whenever you get a question, find out what is the present use of that raw material. Okay. And when you're using it for the new project, what are we losing? So in this particular case, we are losing $4. Please do not get confused with $0.5 because we had no intention of selling it in the open market at $0.5. I hope it is clear. Okay, question number 3. This is a difficult problem, so listen very carefully. H has an inventory of 15,000 kg of raw material M. So right now we have 15,000 kg of raw material M. M has no other use but could be sold as scrap for $1 per kg. So what is the use of M? You could sell it at scrap for $1 per kg. So let's make a note of it. Uses of M, sell at NRV at $1 per kg. One of the company's current products, HN, okay, HN, there's a company's product called HN, which requires 4 kg of raw material N. So we have a raw material N, which is used for the production of the product HN, and we use 4 kg of raw material N. Okay. And what is the rate available for $5 per kg? So 1 unit of HN requires raw material N. 1 unit requires 4 kg and each kg costs $5. That is the meaning of that sentence. So what is the amount? 4 into 5 or $20. $20 is the raw material cost of N, which is used for the production of HN. Okay. Now, M. What is M? Our existing stock of raw material, 15,000 kg. Okay. M can be modified. M can be modified at $0.75 per kg, which means that instead of using N, we can use raw material M, but it requires a modification charge of 0.75. That is, instead of paying $5 for N, we could use raw material M and the modification charge is $0.75. That's cheaper, right? So that it may be used as a substitute for this material N. So we are using it as a substitute of N. Okay. Now, however, after modification, 5 kg of M is required. This is the catch. N, only 4 kg was required, but for M, 5 kg was required. So I will just make a note of it. M requires 5 kg. Okay. So what is the amount coming to? The amount is 5 into 0.75 or 3.75. So for every unit of HN, how much are we saving? We are saving 20 minus $3.75, right? If we are using material M, correct? So what is the savings? So savings for 1 unit of HN, which uses 5 kg of M, is 20 minus 3.75, or it is 16.25 per unit. So now we got the savings of 1 unit of HN, but we don't want the savings of 1 unit of HN. We want the savings of 1 kg of material M, which we are going to use. Okay. Now, H has now received an invitation to tender which could use M in its present state. What does this mean? We are having a new contract where we could use M. So what is it that we are losing? What is it that we are losing? So we have to find out what is the savings that M earns now. Right now, what have we arrived at? Savings for 1 unit of HN, which uses 5 kg of M. So what is the savings for 1 kg of M? It is 16.25 divided by 5. You will get the savings of 1 kg of M. Right now we have the savings of 5 kg of M. We don't want the savings of 5 kg of M. We want the savings of 1 kg of M. So what is the savings of 1 kg? It's 16.25 divided by 5 or $3.25. What does this mean? Which means that right now, for each kg of M, we are saving or we are gaining $3.25. So if we are using M for a new contract, what are we losing? We are losing 3.25. So the relevant cost in this question is 3.25. Because they have asked relevant cost per kg of M. It is not the total relevant cost that they have asked. They have asked the relevant cost per kg, not the total. That is why we are taking $3.25. And even in this question, the NRV is completely ignored because that is not the present use of the raw material M. So with this, we end the relevant cost of direct material. We will continue the concept of relevant costing in the coming session. Thank you.